Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong rejection and failure at yesterday's high and yesterday's VPOC for a move all the way down towards yesterday's initial support area, which was marked as 79.5 to 81.5. Today's initial support is 80 to 82, and we have an open gap at 79.5, and that's the first inflection point and spot where responsive buyers can step in. So far, we've seen buyers stepping in a little bit ahead of that. Heading into the open, look at 2086, keep an eye on that level. Holding below 2086 would further confirm the sell side in control. And if we balance for a while ahead of 80 to 82, then we may not get much of a reaction there. But that is the primary inflection point as far as support goes. 79.5, 80 to 82, possibly 2077 is still a level that can get some reaction. But if you are breaking below 80 to 82, that means that yesterday's overnight breakout has completely failed, and we're now holding below this sideways range. And from there, ES can easily go down into 71.75 to 73.75. That's still an area where we can get a reaction from buyers on first test. And then if we fail at this zone, we have the inflection points at 67.68 and 62 to 64. So far we know that the market is, for the most part, in a sideways balance. We failed near the balance high, and now we're heading back down to retest yesterday's overnight breakout. So this is an area that still has potential to hold, and the buy side can be active, and from there we can balance in a range. But if we are seeing a lot of downward momentum and the other markets are liquidating and the internals are confirming a downside liquidation move, then the 80 to 82 or 79.50 area may only be a pause point before the market goes down into the 71.75 to 73.75 and fills the open gap and the naked VPOC at 73.50. So the way the market is setting up right now, with the sell side in firm control, the downside objective at the minimum is 80 to 82 and possibly 71.75 to 73.75, and then that's a spot where we may get some responsive buying on first test. We'll just have to see the level of momentum that we're seeing heading into that zone, whether the risk reward is really there to justify taking a long at 71.75 to 73.75. Otherwise, it can be better served as a downside target, because right now, heading into the open, the immediate bias is bearish, especially if we're holding below 86. On the upside, we have resistance at 91.75 to 93.75, and sell side can be active there. That can still be a failure spot. And finally, in the event that we actually make it above initial resistance, which seems unlikely at the moment, but if the market is simply establishing a trading range and balancing, then it's possible to go beyond that. Then the final inflection point would be 98 to 2100, and sellers can be active there as well. But given the strong rejection, failure, and breakdown that we've seen in the overnight session, the expectation is for the market to continue heading lower and for ES to hold below 91.75 to 93.75, and then on the downside, the primary objective is at least a test of the 79.5, 80 to 82, but most likely will go down into 77 and 71.75 to 73.75. We just want to see those signs in real time confirming that downward bias and the negative momentum in the market. So those are the main ideas heading into the open. Let's see if the sell side can maintain control below 86 and below 91.75 to 93.75. Focus more on the short side, be careful on the long side, and take it from there.